Welcome back to Investing Talk podcast. Today, we're focusing on ThredUp, a company in the quickly evolving world of secondhand apparel.
That's right. And our material today, it includes ThredUp's recent Q1 2025 earnings report, also a company overview, and an in-depth due diligence report we looked at. We're aiming to break down what these documents tell us about their recent performance, where they stand in the market, and maybe potential future directions.
Okay, so we've got information on their latest financials, how they're using AI, the growth of the secondhand market itself, and even a look at some of their competition. Let's jump in and see what stands out. First off, their recent financial performance, it looks pretty noteworthy.
It does. In the first quarter of 2025, ThredUp achieved $71.29 million in revenue. That's a 10.5% increase compared to last year. Record quarterly revenue, actually.
Wow, okay.
And what's particularly interesting, I think, is the significant reduction in their net loss. It's down to $5.21 million.
This sounds like a big drop.
Oh, it is. It's a substantial 68.5% improvement from the $16.555 million loss they had in the same period the previous year. And earnings per share also showed considerable improvement, moving from a loss of 15 cents to just 4 cents.
That really seems like a significant step forward then, and it looks like they expect this trend to continue.
Well, their projections for Q2 2025, they indicate revenue somewhere between $72.5 million and $74.5 million. And they've also increased their full-year revenue guidance. Now it's $286 million at the midpoint. So that signals a positive outlook for continued expansion.
Suggests the strategies are working.
It seems that way, yeah. Suggests whatever they're implementing is gaining some traction.
And it's always, reassuring to see cash reserves looking healthy.
Indeed. Their cash reserves have grown to $55.4 million.
Okay.
Which implies, improved financial flexibility, gives them more room for strategic moves, maybe investments.
So what's really driving this positive momentum? What are the key strategies they're using to get these results?
Well, several elements seem to be contributing. ThredUp specifically highlights the strategic use of AI tools.
Ah, AI.
Yes, as a significant factor in their improved profitability. It's likely this tech is being used to maybe optimize pricing algorithms, which could lead to better margins, and maybe also enhance efficiency in their sorting and processing centers. That could cut operational costs. A critical advantage, really, in a high-volume business like this.
That makes a lot of sense. Efficiency would have to be key in this kind of operation. What else are they focusing on?
Well, their clean-out bag system is still fundamental, right? It provides a pretty user-friendly way for them to acquire inventory. And additionally, their resale as a service, or RaaS partnerships with traditional retailers, those are proving to be important innovations.
Right, the RaaS model.
Yeah, it enables them to access a wider range of consumers. Though these collaborations, they could present some interesting strategic questions down the line, maybe regarding brand alignment or potential channel conflicts.
We are seeing more traditional retailers exploring the secondhand market now. Seems strategic for ThredUp to partner up.
It does seem that way. And underpinning all of this is their strong position in the secondhand apparel market itself. That market saw substantial growth. It increased by 14% in 2024.
To faster than general retail.
Oh, yeah, outpacing the broader retail sector quite a bit. So this overall market trend is certainly a tailwind for their growth. But that growth is also attracting more competition.
Right. And it's also interesting to see the number of new customers they're bringing in.
That's a vital indicator. Their active buyers increased by 6% year over year, reaching 1.37 million.
Okay.
But even more notably, they saw a 95% year-over-year increase in new buyers, a record quarter for customer acquisition.
95%, wow.
Yeah, so it suggests a growing interest in their specific offering. Now, the question becomes, how well does their managed marketplace model help retain these new buyers compared to, say, platforms where the experience is more direct peer-to-peer?
Good point. So they're operating in a pretty substantial market. What does the competitive landscape actually look like for them?
The apparel resale industry is significant, yes.
Yeah.
Over $30 billion valuation. ThredUp positions itself as a leader in what they call the managed marketplace segment. Meaning they take possession of the items, they handle the whole process intake, quality control, photography, shipping. It offers convenience, sure, but it also impacts their operational complexity, their cost structure.
Gotcha. And who are some of their main competitors in this space then?
Key competitors would include Poshmark, that operates more like a social commerce platform, very community-driven, individuals buying and selling directly.
That's their model.
Very different. And then there's The RealReal, which focuses specifically on luxury consignment. big emphasis on authentication services for those high-end goods.
So ThredUp has maybe a slightly different approach with their managed model and focusing on a broader range of brands. What advantages does that give them?
Well, their competitive advantages seem to come from a few areas. Their scale, just being a major online resale platform, that's significant. Their proprietary logistics, especially those clean-out kits, they simplify the process for sellers and for themselves, too.
Right.
Their AI-driven pricing tools probably contribute to efficiency and competitive pricing.
Right.
And importantly, their strong emphasis on sustainability. That resonates with more and more consumers.
That sustainability angle feels like a big advantage these days. But are there potential challenges, risks we should maybe consider?
Oh, certainly. I mean, while the focus on sustainability is a strength, their success is still pretty closely tied to ongoing consumer interests, trends within sustainable and secondhand shopping.
True.
And the resale market itself, it's getting more crowded.
Yeah.
New players are jumping in. General economic conditions could also impact consumer spending, naturally.
Mm-hmm.
And we should probably also consider potential supply chain constraints, just processing the sheer volume of items. Their growth really hinges on continued consumer adoption of secondhand shopping.
Those are definitely important points. Looking at the market's reaction, though, it seems investors are currently viewing them pretty favorably.
That seems evident, yeah. The 7.43% increase in their stock price right after the Q1 earnings report,
Right.
that indicates that analysts, investors, they're generally encouraged by the improved profitability, the growth prospects of the secondhand market, and the positive effects they're seeing from their AI initiatives.
So, looking ahead, what should investors be watching for? What are some potential positive catalysts, maybe, and risks to that future outlook?
Well, future earnings reports will be critical, obviously, to see if this positive trajectory continues. Potential expansions, maybe into new geographic areas or significant new partnerships, those could also serve as catalysts.
Okay. And the risks.
On the risk side, you have potential regulatory changes. Anything impacting e-commerce or sustainability could present challenges. And, as always, broader economic downturns. They could affect consumer discretionary spending,
Yeah.
potentially reducing demand even for secondhand apparel.
When we look at some of the key metrics for investors, what stands out there?
Well, a traditional price-to-earnings ratio isn't applicable right now because they still have ongoing negative earnings.
Right. No PE.
But the significant narrowing of their loss, that is a positive signal. And it's worth noting, some of their peers, like The Real, also currently report negative PE ratios. It can be pretty common in this kind of growth-focused sector.
What about other indicators of financial health? Debt, cash flow?
The recent reports didn't specifically detail their debt-to-equity ratio or free cash flow. So investors seeking that level of detail would really need to, examine their SEC filings for a more complete picture of their capital structure and cash generation.
But the cash reserve increase is positive.
Correct. The reported increase in cash reserves to $55.4 million does suggest an improvement in their short-term financial stability, at least.
And it feels like their focus on sustainability might not just be environmentally sound, but actually good for business too, especially with younger consumers.
Absolutely. That's a key demographic. The data suggests that secondhand adoption rates among Gen Z have actually doubled since 2022.
Doubled.
Doubled. So this strong alignment with a growing consumer preference, it gives ThredUp a notable advantage, I think. Oh, and one final point for investors maybe to keep in mind is the high beta associated with the stock.
Ah, yes. Explain that quickly.
Sure. It just indicates it may experience greater price swings compared to the overall market.
Okay.
So for those less familiar, high beta basically means the stock tends to be more volatile up and down than the broader market average. Something to be aware of.
Okay. So to summarize for you, the listener, ThredUp is operating in an expanding market. There are encouraging signs of improving financial health. Their strategic use of AI and these RAAS partnerships, combined with the rising consumer interest in sustainable fashion, it certainly makes them a company worth watching.
Definitely. However, it's important to remember, the resale market is competitive. Macroeconomic conditions can always introduce uncertainty. And the lack of specific details on certain financial metrics in these reports just underscores the importance of doing your own thorough due diligence.
This look into ThredUp really does highlight the evolving dynamics of the retail landscape, doesn't it? And the increasing importance of sustainability and how people choose to shop. They're definitely a company leveraging technology to capitalize on changing consumer behavior.
Absolutely. And we would encourage you to explore ThredUp's Investor Relations page for more detailed information. Maybe look at discussions in online investor communities, too. just to get a broader perspective on market sentiment. It's clearly a sector with ongoing developments.
And if you found this exploration valuable today, please subscribe, like, and maybe leave a comment. We definitely appreciate your engagement.